Britain's GDP contracts by 0.1% on October. COP16 concludes in Riyadh with key agreements on land restoration and drought resilience. And World Gold Council predicts slower gold price growth in 2025. Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on the latest economic trends and developments. Welcome back. We start off with Europe, where 4 European central bank policymakers expressed support for additional rate cuts in 2024, contingent on inflation meeting the 2% target. French Governor François Villeroy and Spain's José Luis Escrivá suggested further gradual reductions, with Luxembourg's Gaston Rinssens forecasting a deposit rate drop to 2.5% by spring. Austria's Robert Hotzmann, a known hawk, also endorsed rates returning to a neutral 2% level. The ECB reduced rates by 25 basis points to 3% on Thursday, its fourth cut this year, with analysts anticipating further easing in early 2024. In the United Kingdom, the Office for National Statistics reported that Britain's GDP contracted by 0.1% in October, matching September's decline, marking the first back-to-back drops in economic output since the pandemic lockdowns of 2020. The services sector showed no growth, while manufacturing and construction output fell. The downturn coincides with preparations for Finance Minister Rachel Reeves' budget, which introduced higher taxes on businesses but boosted public spending and investment. Sterling weakened slightly against the US dollar following the data release. British Finance Minister Rachel Reeves expressed disappointment over a second consecutive month of economic contraction. Reeves acknowledged the challenges of reversing stagnant growth and living standards since the Labour Party took office. Despite the setbacks, she emphasized hopes that upcoming policies would drive improvements in the coming months.
The numbers on GDP are disappointing, but it's not possible to turn around more than a decade of poor economic growth and stagnant living standards in just a few months. But you'll see from the plans we've been announcing, whether that is the energy reforms we've published today, the reforms to build 1.5 million homes that we published yesterday, the pensions reforms, the creation of a national wealth fund, this government are getting on with the job in improving economic growth and driving up living standards.
Italy's central bank revised its growth forecast for the economy, projecting an expansion of just 0.7% for both this year and next. This adjustment marks a reduction from earlier estimates made in October, reflecting weaker than expected economic data. The new forecast is below the government's official predictions of 1% for 2023 and 1.2% for 2025. Economy Minister Giancarlo Giorgetti noted that Italy's industrial sector is facing a deepening slump, which has contributed to the downward revision. The National Statistics Office reported that consumer prices in France increased by 1.7% year-on-year in November, in line with the preliminary estimate released last month. This marked a slight acceleration from October's inflation rate of 1.6%. The EU harmonized inflation rate, which aligns with the broader European Union standard, was also 1.7% for November, matching analyst expectations. The increase was largely influenced by a seasonal slowdown in air transport prices, which led to a drop in service prices. On a monthly basis, prices fell by 0.1% in November, following a 0.3% rise in October. Final data from the National Statistics Institute announced that Spain's annual inflation rate climbed to 2.4% in November 2024, up from 1.8% in October, reaching its highest level since August. The rise was driven by higher energy costs, with electricity prices up 4.9% and fuel prices rising by 0.8%. Core inflation, excluding volatile fresh food and energy prices, eased slightly to 2.4% in November from 2.5% in October. Spain's inflation rate has been on an upward trend since hitting a two-year low of 1.7% in September and now matches the European Central Bank's forecast for the Eurozone's annual rate. While in Germany, the Federal Statistical Office, the Status, stated the German wholesale prices dropped by 0.6% in November 2024 compared to the same month in the previous year. This marks a slight improvement from the 0.8% decrease in October and the 1.6% decline in September. The primary driver of the year-on-year drop was a significant reduction in mineral oil product prices, which fell by 10.9%. The overall decline in wholesale prices was also partly due to lower prices in other sectors, although detailed breakdowns are yet to be fully released. On another note, the Federal Statistics Office announced that German exports fell by 2.8% in October compared to the previous month, exceeding the forecasted 2% decline. The trade surplus also narrowed significantly to 13.4 billion euros, down from 16.9 billion euros in September and 18.9 billion euros in October 2023. Exports to European Union countries dropped by 0.7%, while shipments to non-EU nations fell by 5.3%. Goods exported to the United States, Germany's top trading partner, saw a sharp 14.2% decline. Exports to China were also down by 3.8%, while exports to the United Kingdom increased slightly by 2.1%. Denmark's central bank lowered its key interest rate by 0.25 percentage points to 2.6%, the fourth cut this year. This move aligns with the European Central Bank's decision to reduce rates and aims to protect the krone's peg to the euro. Economics expect further rate cuts, with Denmark's borrowing costs potentially reaching 1.85% by April 2025. The central bank's actions are a response to strong pharmaceutical exports, which have put upward pressure on the krone. The Korean Finance Ministry warns of increasing downside risks for the economy in its latest Green Book, shifting from last month's gradual recovery outlook. Amid domestic and global uncertainties, economic sentiment among households and businesses has weakened. In October, industrial output fell by 0.3%, retail sales dropped 0.4%, and facility investment plunged 5.8%. Despite challenges, Korea's unemployment rate remained low at 2.2%, and inflation showed signs of stability, rising 1.5% year-on-year in November. South Africa's finance minister has called on the G20 to overhaul its common framework for debt restructuring, stating it fails to address the high cost of debt servicing faced by poor nations. The system, criticized for being slow and complex, has seen debt relief for countries like Zambia and Ghana drag on for years. The UN reports that over 40% of African nations spend more on debt servicing than health care, with the continent's external debt surpassing $650 billion in 2024. Goronguana stressed the need for multinational development banks to provide concessional financing to reduce dependence on costly international debt markets. And now we move on to a press conference in France for handing over and taking over between the newly appointed Prime Minister François Bayrou and the resigned Prime Minister Michel Barnier. That was a live broadcast coverage of the press conference of the newly appointed French Prime Minister. And now back to our bulletin. Freddie Mac said that U.S. mortgage rates dropped to 6.60% this week, the lowest level since late October, marking the third consecutive week of declines. The 30-year fixed-rate mortgage rate, down from 6.69% last week, is now significantly below the 6.95% average recorded a year ago. Freddie Mac's chief economist, Sam Khater, noted the combination of falling mortgage rates, steady income growth, and a strong stock market has increased home buyer demand. However, affordability challenges continue to limit the pace of recovery in the housing market. The U.S. Commerce Department has preliminarily agreed to provide $225 million in subsidies and $350 million in loans to Bosch for a $1.9 billion silicon carbide semiconductor plant in California. Set to open in 2026, the facility will boost U.S. chip production, crucial for EVs and clean energy tech, and account for 40% of domestic SiC manufacturing capacity. The funding is part of the $52.7 billion semiconductor initiative to enhance local production. The 16th conference of the parties COP16 to the United Nations Convention to Combat Desertification concluded in Riyadh with significant agreements on land restoration and drought resilience. Over $12 billion in financial pledges were secured from global partners, including Saudi Arabia, the OPEC Fund, and the Islamic Development Bank, aimed at combating desertification and promoting sustainable land management. A key outcome was the Riyadh Policy Declaration, which sets the framework for a unified global effort to restore degraded lands and improve drought resilience.
COP16 Climate Summit held in Riyadh ended with financial commitments exceeding $12 billion aimed at addressing land degradation and drought resilience. Representatives from 196 countries attended the event, which focused on global efforts to combat desertification. Major contributions included $10 billion from the Arab Coordination Group, $1 billion each from the OPEC Fund and the Islamic Development Bank, in addition to $150 million from Saudi Arabia. A key outcome was the adoption of the Riyadh Policy Declaration, providing a framework for sustainable land management and restoration efforts. The conference highlighted the urgent need for international collaboration to combat the environmental and socio-economic impact of land degradation. Discussions underscored the role of private sector investment to bridge a $355 billion annual funding gap for restoration projects. COP16 also featured initiatives such as the launch of the International Water Research Center to tackle water scarcity and renewable energy collaborations to promote sustainability. UN officials emphasized the global impact of land degradation, linking it to food insecurity, conflict, and forced migration. As COP16 concludes, attention turns to COP17 in Mongolia, with expectations to build on the progress made in Riyadh.
Joining us from Cairo is renewable energy expert Dr. Mohammed Kafafi to discuss the outcomes of the COP16 and the financial commitment. Dr. Mohammed, welcome to Qnews. Thank you so much for joining us. Now, COP16 concluded with over $12 billion in financial commitments to address land degradation and drought resilience. How significant are these contributions in the context of global climate efforts?
Thanks for your call. Please, I want to explain an important point. Poor governance, one of the main issues confronting the world. Poor governance, it means what? It means still only 27 countries committed with carbon tax. Financial, green finance, and a lot of $1 billion already expecting each round from COP. But unfortunately, without good governance, without applying carbon tax law, the result will not be good. Then I see this is as a good, yes, maybe this is give us a good vision and encourage for moving towards green transition, but without good governance from the countries, it is not the benefit. We will not get a good benefit as we're expecting.
Mm-hmm. Now, Dr. Mohammed, one of the key outcomes was the adoption of the Riyadh Policy Declaration. Can you explain how this policy framework will guide sustainable land management and restoration efforts globally?
Actually, now the world is moving towards zero carbon or not net zero carbon emissions at a national and global level, okay? One of the declarations, like Riyadh Declaration and others, trying to enhance or promote this concept. Actually, how to implement by moving towards or enhancing or promoting the application of sustainable energy. Because energy is the main source of pollution, to be honestly. Especially we are working or we are basing on fossil fuels. Then this declaration aiming to reduce carbon emissions. But again, this declaration as a commitment is very good, but without law, without carbon tax law, similar to applied in European Union, situation will not be too much benefits.
There was also a strong emphasis on the private sector's role in bridging the funding gap for land restoration. How can the private sector contribute effectively to these global efforts?
Actually, we always talking about, we have a golden triangle. Golden triangle, it means you have three sides. Public sector or governmental sector and private and NGOs or non-governmental sectors. This is the golden triangles to achieve sustainable development. Private sector making a crucial roles towards green transition because a lot of projects could be implemented through private sectors. Okay?
Yes, also UN officials highlighted the link between land degradation and issues such as food insecurity, conflict, and forced migration. How urgent is the need to address land degradation in this broader context of global challenges?
We still also, another point is named environmental accounting or green accounting. This field of accounting estimating how much loss due to degradation, because all of us, we know that climate change, troubles from climate change, but nobody now estimating. For example, can you imagine the world losing each year about minimum expecting 6% from total economy size for just for environmental losses. For example, now the world is exceeding $100 trillion per year, total size of the economy now, world economy. Now we're losing minimum $6 trillion annually due to environmental losses. If this number considered in our activities in the economy, I think the situation will be changed.
Thank you, Dr. Mohammed Kathafi, for your insights and for all the information you provided us with. Now, back to our news. The European Commission has intensified its humanitarian efforts in Syria, announcing an additional €4 million in funding, raising its total support for 2024 to €163 million. A new humanitarian air bridge will deliver 50 tons of medical supplies from EU stockpiles in Dubai to Turkey for distribution in Syria, alongside 46 tons of aid transported via trucks. The funding will address critical needs, including trauma kits, emergency shelter, sanitation, and food for over 61,000 people in northern Syria. EU leaders emphasized the importance of swift action to mitigate the impact of ongoing conflict and instability on Syrian civilians. The United Nations Economic and Social Commission for Western Asia and Lebanon's Women and Children Parliamentary Committee have warned that Lebanon's care economy is nearing collapse due to the ongoing war on it. A new policy brief titled Restoring Care, Rebuilding Communities, Path to Recovery for Lebanon highlights the severe strain on the country's health, education, and social care systems. ESCWA Ruba Arja emphasized that without comprehensive support, Lebanon risks economic collapse, urging the integration of caregiving into national recovery strategies and strengthening support for caregivers to stabilize Lebanon's economy and society. Saudi Arabia's Public Investment Fund has acquired a 15% stake in FGP Topco, the holding company of Heathrow Airport Holdings, as part of a deal with Ferrovial SE and other shareholders. French investment house Erdien simultaneously purchased a 22.6% stake in FGP Topco, with both transactions totaling €4 billion. PIF Deputy Governor described Heathrow as a key UK asset, emphasizing its role in global aviation and its potential for sustainable growth. Qatar's Finance Minister Ali bin Ahmed Al Kuwairi said the country's 2025 fiscal budget anticipates total revenues of 197 billion Qatari riyals, a 2.5% decline from 2024 levels, driven by conservative oil and gas revenue projections at $60 per barrel. Expenditures are projected to rise by 4.6%, reaching 210.2 billion Qatari riyals, with a budget deficit of 13.2 billion Qatari riyals to be financed via debt instruments. Key allocations include 41.4 billion Qatari riyals, representing 20% of the budget for health and education. The World Gold Council expected that gold prices, which soared over 30% in 2024, to rise at a slower pace in 2025. The report highlights factors such as moderate growth, inflation, and U.S. President Donald Trump's second-term policies, including potential trade wars and below-par economic growth, which may dampen investor and consumer demand. It noted that gold prices could surge if significant interest rate cuts or shifts in geopolitical and financial conditions occur. Gold prices fell on Friday, but were still on track to finish the week higher as attention turned to the U.S. Federal Reserve's December policy meeting, at which it's widely expected to deliver its third interest rate cut this year. Spot gold fell 0.4% at $2,671.39 per ounce, as the U.S. dollar hovered near its highest in more than 2 weeks. U.S. gold futures declined 0.6% to $2,692.40. That's all for now. Here's a roundup of today's key headlines. Britain's GDP contracts by 0.1% in October. COP16 concludes in Riyadh with key agreements on land restoration and drought resilience. And World Gold Council predicts slower gold price growth in 2025. That's all for today's Economic Bulletin on Qnews. Stay connected for more news and updates, and thank you so much for watching.